Today, Governor Lowe and the Reserve Board met, and as widely anticipated, and it's going to be a bit of a broken record, that the cash rate remained on hold at 1.5%. So with the cash rate on hold and basically all the levers doing their thing, I wanted to focus in on basically jobs, so the unemployment story of the nation, because that is going to be the catalyst that drives us forward, because we have seen really sluggish wage growth in the marketplace, so it's important to understand those. So let's have a look at them. So from the ABS data that we've got, we can basically see that in July, the unemployment rate dropped from 5.7 down to 5.6. So we created around 27,900 new jobs. Now we did have another 1,100 people join the unemployment ranks, but on whole, we're basically reducing that down. Now, to put that into context, what we want to talk about is what has been the long-term unemployment rate across Australia. So dating from 1978 right through to 2017, the long-term average of the unemployment rate has been 6.9%. Now at 6.9%, that sort of gives you some context. We're currently sitting at 5.6%. Now the worst story was way back in 1992 with that recession that we had to have when we had unemployment sitting at 11.2%. Now the best rate we've seen was also an unemployment rate at 4% back in 2008. So put it into context, the actual unemployment story or the employment story of the nation is actually sitting pretty reasonable. Now we'd love to get that down, because the further that goes down, the more pressure that puts on wage growth, and that's a good news story. More people earning more money, they're potentially going out and spending that type of money. Now we also want to correlate that to business confidence, because we've been talking about this. If you watch these videos on a regular basis, last year I was talking about business needs to get out and start spending and get the economy moving. Now the only time business will spend is when they have the confidence and in terms of how the economy is moving. Now if we look globally quickly, we can see that some of the other economies around the world are actually doing fairly well. Europe's starting to continue its momentum, the US is performing okay, China's doing okay, Japan's doing okay. Now that's a good news story. Now that is flowing into the business confidence numbers that we're seeing. So we did see business confidence hit 12. Now that's from a reading of 9 from the previous month. So in July it hit 12. Now these types of business confidence numbers are really encouraging when you consider that the long-term average is around 5. So it's really important to understand, and we were getting those numbers, over time. So it's really important to understand that since basically around 2008, we're starting to see these new business confidence numbers come through. Now, hopefully that means business is investing, and when business invests, that means jobs, and jobs obviously means growth. So that's a good news story. Now, the last thing I want to sort of round this conversation around employment out on is the ANZ Job Numbers. So we've seen since the start of the year that the ANZ Job Numbers are up 6.5%. Now that's a good number. That's basically saying from this time last year, we're up 6.5% on creating new job ads, which means that hopefully, again, more employers are employing. So rounding that out, I'm actually reasonably okay about where the economy is sitting right now. And that's exactly the same position as which the RBA is sitting. They're saying the levers are doing their jobs. When we start to look at the lending lever and the macro-prudential regulation that's coming into play, we've also started to see that that's also having an impact. So we're definitely seeing a lower number of interest-only loans. We're definitely seeing a lower number of investor loans as well. Now that also says to us that the broader property market is now starting to slow. If we have a look at the core logic numbers that have just come out, it's also telling us that story. So in Sydney, we saw no growth in the month. And in terms of the quarterly growth, it's starting to slow. And that means that we're coming off the peaks that we saw back in late 2016. And that is a good news story. Melbourne is continuing to grow, but not at the fastest pace that it was growing at some part of this upward cycle. So there is still people are reasonably bullish about Melbourne's story. Hobart's also been another standout, but coming off a low base, and certainly I think a lot of investors are now looking at the Hobart market because of the very attractive yields in that market. But just remember, that market does have very quick ups and then some sluggish or long-term flat periods. So you want to know what you're doing in that particular market. Our two declining markets are still Darwin and Perth. Those markets are still in negative, and they're still continuing to retract in a negative basis on a quarterly and month-to-month basis. Canberra is another good news story, but if you're looking to invest in Canberra, just remember the land tax is very prohibitive and you'll be giving away a lot of your returns to basically the government there. So overall, the property market's looking good. Adelaide is also continuing to grow. It's just not at the pace that we're seeing in other markets. And also Brisbane's housing market's doing very well, but their unit market is also one to be very, very careful of due to an oversupply. So broadly speaking, there are definitely opportunities in the Australian property market, but we're definitely starting to see that these sort of higher interest rates and higher cost to hold are having a pinching down on investors and the investor appetite. And again, I think that's good for a long-term sustainable property market. And so that's why more than ever, we keep saying this, but more than ever, you need to get that asset selection right. You need to be going into those markets where supply is low and demand is high if you want to achieve the very, very best returns, which is the capital growth and also some strong rental yield returns over time. I hope you've enjoyed this video and look forward to chatting with you next month.